Well, welcome back to IAG Trade Talk, everybody. Welcome back for 2022, our first Trade Talk for the new year. And it's going to be a great one because we've got Jason Ader, the founder and CEO of Springowl Asset Management with us. And Jason's going to be telling us, well, all about Okada Manila and the listing of Okada Manila on the Nasdaq, but a few other things first. So Jason, welcome to IAG Trade Talk.
Thanks for having me. Happy New Year to you.
Happy New Year to you too. And just before we get into Okada Manila and talk about Asia, I know that you know a lot about the Asian gaming industry, but there may be quite a few of our viewers that don't know you. So perhaps could you just give us a little bit about your background in the industry, where are you based now, that kind of thing?
Sure. I've been a long-time investor in the gaming industry. Very recently as a large shareholder of a company called Playtech, which is a leading business-to-business provider for online gaming, processing about 1 billion bets every day. Incredible company and technology. Prior to that, I was a very large shareholder in a company that owned the PokerStars brand called Stars Group. At the time, it was the largest online gaming company in the US and was sold to Flutter Entertainment. Before that was a large shareholder of bwin, which is a great sports betting business that owned the Party Poker brand and was sold to the Entain Group. And prior to that, I spent 8 years at Las Vegas Sands as a director. And before that, had been an investor and sell-side analyst with a specific focus on the gaming, hospitality, and leisure industries. So it's been over 2 decades now, and very much excited about the changing direction and the future I see for really all areas of gaming right now.
It's certainly an interesting time globally, and 8 years on the board of Las Vegas Sands with Sheldon Adelson would have been an interesting experience, that's for sure.
Well, he was the best.
Amazing guy. We've done so much on him, and obviously such a huge influence over here in Macau with what he's done. Look, let's talk about this 26 Capital merger, if that's the right word, with Okada Manila. And the plan is to eventually take it onto the Nasdaq. Just tell us a little bit about how that came about, why you're doing it, what your thinking behind that is.
Well, I think it really was a decision by Universal in March of last year, where there's public announcements that they were considering spinning off their gaming business in a SPAC structure, and SPACs have become incredibly popular and successful investment vehicles, not just for gaming, although there've been some great case studies in gaming, such as DraftKings and Genius Sports and Golden Nugget Online. It's just a very long list of gaming companies that have come public via SPAC, but other big industries as well, beyond gaming and beyond hospitality. And so I think Universal's management viewed the SPAC structure as a way to unlock shareholder value for the Tokyo listed company. And I feel we were really a great fit, a great partner, given my background in gaming and some of my partners in 26 Capital, which included Rafi Ashkenazi, who was a former CEO of Stars Group, just incredibly innovative operator around the online gaming space, and Joe Kamenko, who's an important game designer both for Aristocrat and for Zynga. And what Universal is looking for sort of went beyond a Nasdaq listing, in my view, but very much wanted to have a expert gaming partner to help them list and help them build out their business plan beyond single asset in an amazing single asset in the Philippines market.
So a lot of our viewers are sort of industry types who may or may not be financial types. So just for their benefit, but just talk a little bit more about SPACs, special purpose acquisition companies, or blank check companies as they're called. They've been the hot new thing now. Maybe could you just give us the 2-minute version of what they are and how that differs from a normal listing?
Yeah, I mean, I think the SPAC product really has evolved as an alternative to an IPO. In my view, it in not all cases, but in many cases, it could be better for a company to list via SPAC versus an IPO for two big reasons. One, it's faster, and two is as part of a merger, and a SPAC is essentially merging with the business that's going public. You are under U.S. securities laws able to provide a lot more information about the business, including financial projections, in what's called an S4 document, a merger document, a publicly filed merger document. And so when you do an IPO, you file what's called an S1 document, which is constraining, and you don't as an owner of a business have as much flexibility to share your business outlook and your business projections. And so for companies that are looking to access the US capital markets who want to be public, the SPAC has become a faster way to do it, and also a way to better articulate where you think, for example, your business may be as you look out to 2025 and 2026, and how you plan to achieve those projections. So, the only thing that I would add that's new and also, been quite positive for the gaming industry is SPACs allow you to combine businesses, as part of a go public as well. So let's use DraftKings as an amazing success story. DraftKings merged with SB Tech and came public via SPAC. Obviously, in an IPO, you wouldn't be able to combine a small business and a big business and go public. You'd have to sequence it thereafter. So there's an enormous amount of flexibility around the SPAC structure, in addition to speed and disclosure benefits as well. And I think that's why it's become so popular. And investors like knowing a little bit more, I think, about the businesses that they're investing in via SPAC versus an IPO, where the traditional prospectus in an IPO is very limited as to what one is able to say.
Just moving on to Okada Miller. I know when I talk to people in the industry over here who aren't in the weeds in the Philippines or in the weeds with Okada Manila, they often say there's so many entities over there. There's TRLEI, which is Tiger Resorts Leisure and Entertainment Inc. There's Tiger and TRA. There's Okada Manila Inc. Obviously, there's Universal. There's a history there with Okada himself. Perhaps could you just explain a little bit to us, which entity is which, and who actually operates and how they're all related to each other? That would be quite useful for some people, I think.
Yeah, I mean, the part of Universal's objective in doing a SPAC listing is to simplify all that. And for the Nasdaq investors, the intent is that if you become a shareholder on the Nasdaq of the Universal, which will be the listed name, the company will trade under Universal Resorts. Universal Resorts will own the Okada Manila asset and be pursuing other gaming opportunities. So while it may appear complicated, and I would certainly refer anyone listening or watching this podcast to look at the materials on the 26 Capital website, which really go into a lot of detail as to how the entity is currently structured. The listing will make it much more simple. If you own a share of the Nasdaq listed company, you'll own a share of the business, in the Philippines, and it's just an amazing asset that I'm really excited about. It's one that I've always thought was one of the best integrated resorts in the world, but just not really well understood or appreciated because it hadn't really been open. I mean, it was really 60% open for 2 months in 2019 before the pandemic hit. So we've never really seen, the full potential of the asset, which I think is really one of the exciting parts of this transaction.
Yeah, well, I know in my trips over to the Philippines, over to Entertainment City, which I normally would go every month, but unfortunately haven't been able to go since the beginning of the pandemic. Watching it grow and watching it develop is very interesting. Very, very large property, and a lot of machines and a lot of that great big massive water show out the front sort of thing. We're talking a pretty serious integrated resort over there. I mean, where do you see after this is finished and we've got this Universal Resorts Nasdaq listed entity. Where do you see that listed entity? Do you see you focusing on Okada Manila and developing that more? And if so, in what way? Or looking for other properties around Asia or indeed elsewhere in the world? What's your focus there?
I think the way I view it is as follows. There are U.S. investors who are looking to invest now and over the next several years for sure in post-pandemic growth opportunities in Asia, and doing that at what would be an attractive price and attractive valuation. And so, the property in Entertainment City, it's over $3 billion in construction now, and if we were to start building that project today, because of labor costs and material costs, I mean, it would probably be close to $4 billion. And so we're I think, really creating an attractive value proposition by bringing this asset out at a $2.6 billion valuation. I think it's a pretty big discount to replacement cost, a pretty big discount to construction cost, but it's also being spun out debt-free and or virtually debt-free. There'll be very little leverage on the company, which would be very different than most other gaming companies do find themselves with significant amounts of debt, particularly coming out of this pandemic. The business that's listed on Nasdaq will be a premium asset with very low leverage, and I think that should be attractive and give management, give Byron Yip and Hans van der Sande and Universal Board, just an amazing ability to go out and pursue new growth developments, new opportunities, around the Asian region, and so from that perspective, that should be real exciting to U.S. investors who, at some point, say, things are recovering, the pandemic is ending. There is going to be a boom in travel to the gaming markets. And if Las Vegas is any proxy, I mean, last year, I think most properties had peak EBITDA, peak cash flow, peak. I mean, this is without business travel. This is really without conventions and meetings. It just gaming and people wanting to get back out and live a normal life. Las Vegas had a peak year. So I have no doubts that trend will happen in Philippines. That trend will happen in Macau. It'll happen throughout, Singapore. The whole region will experience what Las Vegas saw last year. And from that perspective, I think it's also really exciting to be a part of an opportunity like that.
Yeah, it's been a tough couple of years for us, and a light on the hill for us has been to see what's going on in Las Vegas and to see what is it, 8 months running now in a row. It's been 1 billion GGR, and it's just been absolutely pumping over there. So I've been waving the flag and saying, pent-up demand is a real thing. Of course, over here in Asia, we seem to be going slower than the rest of the world. It will take longer for us to open up, but when we do, hopefully it replicates what we're seeing in other parts of the world with pent-up demand, as you say. How do you see the Philippines market? It's a little bit of a different market, well, quite a different market to, say, Macau or other places around Asia or Singapore and so forth. Like, specifically, was there a particular thing about the Philippines market that attracted you, or was it just sort of more opportunistic, or was it, what are your thoughts on the Philippines market as a land-based gaming market?
I mean, it's a good question. I think, to your last point, I actually believe that when Asia recovers, it will recover even better than Las Vegas. I mean, I just think there's so much pent up demand, and there's more limited capacity that we'll look back at this call. We'll look back at the Vegas numbers of 2021 and say, wow, Macau is way ahead of sort of peak numbers when the borders reopen and when visas, the visa schemes begin again. And I think without a doubt that'll be the case in the Philippines and Singapore as well. The Philippines market specifically is a very attractive regulatory environment. It's a fast growing market, and I think Okada asset, though, I mean, you could put that facility anywhere and it would be a globally competitive integrated resort. I mean, it could be in Macau, it could be in Singapore, it could be in Las Vegas, it could be in New York City. and be an attraction that people would want to see. And I think that, to me, that was really sort of the standout attribute of this opportunity, to be able to bring such an exciting development that really, again, hasn't achieved its full potential to the U.S. markets in a fast-growing area. I mean, the Philippines market is a very fast-growing market and still hasn't achieved its full potential. Because, I mean, if you think about it, again, it was shut down in February of 2020, and the Okada Manila asset, I think, would have grown the market had it had the ability to open to full capacity, which it will do, over the course of the next year.
Well, we've had a lot of openings in Asia over the past 20 years now, and it seems to be almost a rule of thumb now that you need 3 quarters to ramp up. So it never really got that opportunity. It's very nice of you to say that that properties over here would hold up anywhere in the world. I'm inclined to agree with you. I know when the liberalization of the Macau industry happened, and then we started building properties here, at the beginning we were learning from the other side of the planet, and now it's almost flipped around the other way, that all the biggest and most beautiful properties in the world in the last 20 years have been built here. Although, having said that, Vegas is starting to get their act together. We've got Resorts World open up there, and a few things on the books there. And actually that leads into my next question, which is about New York. I hear that Universal Resorts is looking at bidding for the New York opportunity, which has just come up now. What can you tell us about that at this stage?
Well, so Universal did put forth a bid in New York, and New York is running an RFI. So this request for interest, and Universal's interested in New York. The project name is the Mirai, which in Japanese means the future. And it's really an exciting project. It's a project that includes and this was really off of the new mayor's desire to get paid in crypto in his first 3 paychecks, and make New York the crypto trading capital of the world, is to propose having one of the world's largest crypto trading facilities as part of the development, in addition to the traditional casino and hotel and esports is a very big growing area. It's obviously been very successful in Korea, but coming now to the US and becoming increasingly more relevant in younger demographics to build the world's largest esports facility as part of that development. And so I think New York is an exciting market. It's still very early. The regulatory and taxation is still an unknown. But if there's an opportunity for Universal to expand in that market, they'll be excited to do it.
So if somebody buys shares on this listed entity, you won't just be buying into the Philippines. Hopefully one day you'll be buying into a New York property as well. Quite a diversified opportunity there.
Potentially, but also Japan. I mean, as you see, Universal has made some public comments about their interest in certain areas of Japan that haven't yet evolved. But I think eventually the Japanese market will open, and obviously Universal would be in a good position there as well. So the fact that the company will have so little debt, such a strong balance sheet, significant profits out of the Philippines, really does give it unique flexibility to pursue opportunities all over the world as it sees fit. And again, that's very differentiated from so many of the listed companies that have had to endure this pandemic period and have not had profits and have had to increase their balance sheet leverage, who are now somewhat disadvantaged.
Yes, we've seen plenty of that. It seems like last year, every sort of 5th story we wrote was another company getting another 400 million in notes or 800 million in notes or something like that. But we'll eventually get past that. I mean, do you see synergies between and let's just stay on the theme of New York for a while. If there, I mean, I realize it's a long way off, but it's nice to speculate, right? Let's say you had a Philippines and a New York property. How do you think they might bounce off each other? You think you could share, send players in both directions? Are there back of house synergies? Are there opportunities there to take advantage of two properties being in 2 different sides of the world in that way?
I think the attraction to Universal is they've view themselves as a successful developer of a globally competitive integrated resort in a market like Manila, and they have the expertise to listen to the community and the city of New York and its needs, and work to develop something comparable. The shared expertise, or the ability to develop, own, and operate a gaming facility, the sharing of customers 12,000 miles away is probably going to be more limited. It's not like having a property in Las Vegas and a property in Atlantic City.
Right.
But I think from Universal's perspective, and this is very differentiated versus MGM or Caesars or Sands, they would be willing to make New York their only asset in the US. And so on a New Year's Eve or on a big, even New York wouldn't have to worry, where, like for MGM or for Bally's or for Caesars, where do those companies send their best players? Do they send them to New York, or where the tax rates are likely to be higher, or to Las Vegas, where the tax rates are likely to be lower? And sort of there's this embedded conflict with the diversified US operators, particularly for a city like New York, which very much wants to grow travel and tourism and economic impact. Universal is prepared to say this will be our one and only in the US. And so please take, our proposal seriously. And that's unique, that's different.
Yeah, that'll be very, very attractive to the state of New York, that's for sure. Jason, you've got a podcast, Deviate To Win, which you very kindly had me on last year, and you had Rob Goldstein and Bally as chairman, Sue Kim, and I imagine you probably had a few more since then as well. Tell us a little about why you started the podcast, and where did the name Deviate To Win come from, and what's your inspiration behind that?
Yeah, so my pandemic project was, I've always wanted to write a book. So I wrote a book called Deviate To Win, and it's really all about the success stories I've seen as an investor, most of which were about people and entrepreneurs and businesses that have succeeded by going the opposite direction as everyone else. And obviously Sheldon Adelson was sort of like one of the best examples of that. He was a visionary, and there've been plenty of others in the gaming industry. Sue Kim, by integrating broadcasting into land-based casinos and bringing back an old brand, sort of has that spirit of really deviating, doing things that are different and creative, and against the grain. I mean, to a large extent, it's part of why I like Macau as an investment opportunity right now. It's just viewed now as sort of institutionally uninvestable for a variety of reasons. Some of it has to do with the pandemic. Some of it has to do with uncertainty, the concession renewals. I think it's setting up to be one of the more attractive areas for investment in gaming, because there's just been so much selling, and the valuations now really reflect pretty negative case scenarios. So to deviate to win, it's the best way. Elon Musk probably sits at the top of that food chain, as does Jeff Bezos. I mean, it's hard to find better companies than Tesla and SpaceX and Amazon. But the spirit of the podcast, really goes to the book, which is to just, explore lots of case studies where I've seen success, which aren't, about following the crowd. It's about breaking from the crowd and, creating your own path to success. That's been the winning strategy that I've seen.
Well, it's great to hear you say that. I feel good about myself now, because whenever people say I've gone crazy and doing the wrong thing, I think, must be I'm onto something here. Mm-hmm. It's always good to hear people telling you you're doing the wrong thing, and I couldn't agree with you more at the moment with the very, very low prices we see these Macau concessionaires at, and some of the comments. Actually, I'll lead straight into that now. I was going to ask you that a little bit later, but I mean, what are your comments? I know you follow IAG quite closely. I know you read Breakfast Briefing and you keep up with what's going on in Asia. And I mean, what we've been writing a lot, as you know, about the retendering process and that's going on at the moment at the end of this 20 years and so forth. And we lost, what was it, 26% of all that market capitalization that we built up over the past 20 years in a single day on the 15th of September earlier this year. I think it was some $18 to $20 billion. I mean, and that was largely driven by the US, right? And personally, I feel that the US doesn't, you always feel misunderstood, right? They don't understand us. They don't realize it's not as bad as what they think. Whereas you've got a foot in both camps. You're over there and you understand those guys, but you also do follow the Asian gaming industry quite closely. Well, even to the extent of your involvement in Okada Manila. So you're uniquely placed to give comment on that. What's your view of what happened on that day on when the tender document came out on the 14th, and then there was the crash on the 15th? Is it a massive overreaction? Is this uninvestable thing that's going on in the finance investment community in the US about Macau? Is that unfair or perhaps partially fair? Just what's your overall view on all of that?
I think the consensus view of American investors, US-based investors right now is really quite cautious with respect to Asia, but more specifically China. And I think there's this misunderstanding, and you've clarified me even in my own conversations, the difference between Beijing and Macau government. And so think about like the importance of Jack Ma to the US markets, and Alibaba being such a critically important company. And in a lot of ways, he's viewed as the Elon Musk, of China. And, the perception is that he's, been disappeared, has been sort of, sent home. And nobody's really seen him nearly as much as we used to. And that's scary to US investors. And there's been a whole host of other examples like that, where the perception is growing that China's anti-capitalism and anti-wealth and anti-success. So it's made investors who don't understand the difference between the Macau government and the Beijing government very well. It's just an easy brush to cast across sort of the whole region. Well, they're close by, they must be the same. And therefore, what happens in Beijing is the same as what happens in Macau. I don't believe that to be the case at all. I believe it's at the very essence of the opportunity today. I do think things will work out post-pandemic quite well for investors. I think, the issues, that, have been raised, in sort of this process to solicit sort of public opinions on the Macau gaming has come to an end. And there wasn't really any surprises in my view as to how that came out, and in some ways maybe even a little bit better than I would have thought. But I think, the whole process of the retendering and the licensing, and dividends, and the governance will all work out fine. The demand to me, this just comes down to demand. The demand in the region for the Macau product, whether it comes direct or via junket, is extraordinary. It's like nothing anyone has ever seen in the history of the gaming industry. And the infrastructure in the region, particularly Macau, but more broadly in Singapore and Philippines, is incredible as well. So when you just think about it as simple as there's massive demand and there's amazing infrastructure to facilitate that demand, the rest of it's just noise and, it's fear and panic. And that's, so I look at, Macau and say, you need to be patient. You're not going to day trade Macau and make a fortune. But, based on the prices last year and it's 10-year, many of the companies are 10-year lows now. 10-year lows, pretty amazing. If you look at prices sort of now and sort of say, well, where do you think they'll be in, 3 years, 36 months? And, when the pandemic's over and things have opened up and, there's more certainty around, the duration of concessions, I think materially higher than current levels.
Well, it's nice to hear a US-based investor have that level of understanding because, and it's even happened twice before, hasn't it? It happened in 2009 with the GFC. It happened in 2015 with the, so-called corruption crackdown and a few other factors as well. And I thought that opportunity would never arise again. I thought, okay, well, that's it. It's played out. Now, but here we are again. We've got another chance to ride a galaxy from $40 to $100, or to ride a win from $6 to $26 or whatever it might happen to be. So sounds like you're more on the Macau side of the coin than the American side of the coin on that one. Well, Jason, it's been really, really nice to talk to you, and we really look forward to seeing what happens with Okada Manila. There's a good team over there. It's a great property, and we hope that everything. What's the timeline? What will we see next in the process rolling out?
Yeah, I mean, I think we're hoping to have an investor and analyst day over the course of the first quarter, and have this deal close shortly thereafter. So stay tuned. We're excited to meet lots of new investors and have research analyst coverage over time, and be a Nasdaq listed company. But really appreciate you having me on today, and always enjoy our conversations.
Thank you, Jason. Thank you for joining us. I'm sure we'll be seeing a lot more of you, and it'll be great for Okada Manila to be a listed company. We can follow it like a listed company, and as you say, have all the analyst coverage of it, and we can try and get Byron on and talk to him and all that sort of stuff. So enjoy yourself over there. Jason Ader, thank you for being on Trade Talk, and hopefully we'll see you again soon, maybe a few months down the track.
Great. Look forward to it. Thank you, Andrew.
Excellent. And to everybody out there, thank you for watching this episode of IAG Trade Talk, and we'll see you next time. Bye for now.